Good morning, traders. It's 8:10 a.m. Chicago time on Wednesday, the 2nd of September, 2015. This is another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overnight news is fairly light. By the way, I apologize for starting 10 minutes late. My morning run took longer than normal. China's stocks opened lower but later rallied back, passed unchanged on reports of brokers pledging around 30 billion yuan in support and more speculation of state buying. Fed's Rosengren yesterday says the tightening will be more gradual and to a slower point than previous cycles, missing inflation mandates reason to keep rates low. Moving liftoff back or forwards by a couple of months makes limited economic difference. Yesterday, after the close, API oil inventories were reported. Crude oil came in at plus 7.6 million, Cushing plus 0.3 million. And then this morning, we got MBA mortgage applications in the U.S. 11.3% versus 0.2% prior, a lot higher. And then, of course, we got the August ADP employment change. This number is looked at as a sort of a proxy for the non-farm payrolls number, which is due this Friday and is a major release here in the U.S. ADP employment change came in at 190,000 versus 200,000 expected. Looking ahead today, we're looking for ISM New York to come out at 8:45, no expectation. At 9 Central, we're looking for factory orders for July, 0.9%. At 9:30 Central, we're looking for DOE U.S. oil crude oil inventories looking for 700,000. Positive distillate inventories looking for 1 million barrels, and gasoline inventories looking for negative 2 million. As far as, and then at 1 o'clock today, Central, 2 Eastern, we've got Fed's beige book. I don't see any speakers left, really. IMF's Lagarde spoke last night, and Dieselbloom spoke at 3 a.m. this morning. There's some auctions, 30-year Canadian auction, but that's really it. So looking at the rest of the week, tomorrow we have German services PMI, Eurozone retail sales, but the key thing tomorrow is the ECB rate announcement. And then we get U.S. trade balance, services PMI, and ISM non-manufacturing. And then Friday, we have non-farm payrolls. Okay? Let's switch gears and look at what we expected yesterday. I actually intended to pull up yesterday's Trader Bite and play out the portion where we outlined what was expected, but I don't have time for that since we're starting so late. So yesterday's expectation, for those of you who are here, we looked at the fact that Thursday, Friday, Monday were balanced, and if you look at that, let me move this over here. If you look at that, it puts us in a balanced zone. So we box that area in. As we box this area in, we look at where prices were accepted. So we can see that the point of control was right there for this balanced zone. Remember, I was expecting 97.50 on this, and it got up to 91. And so the most traded price in this zone is at the 1979 area. And then yesterday we opened in the gap. This is where we opened right here. And the expectation for yesterday is for a little responsive buying. And then we looked at 1951 right here as the over underline for sellers to stay in control. But the main idea, the main hypo for yesterday is responsive buying, and then for it to drop and hit the overnight low, which was at 14. first, and then our main target's 1894, if you recall. And what it did yesterday was push to it was completely balanced, choppy, and terribly boring for most of the day, and then it finally broke lower, retested, chopped around, and then it finally pushed to 98.75. 98.75. It missed our 1894 target by several points, unfortunately. But we had the right idea. The idea for yesterday was selling to dominate again. The overall hypothesis, the intermediate term hypothesis, is for 1831 to be tested. So I'm looking at this move from the low, from that volatile period, all the way up here. I'm looking at all this to be corrective or just a pullback, and I'm looking for it to continue lower and to target 1828, 25 as the key high volume node in the area. That's the most accepted price in the area, and I'm looking for that to be tested. So it's looking rough because there's a lot that's being done to prop up the market. Of course, short sellers or bears in these last 9 years or something, or 7 years have not been rewarded at all. But I've got to go with what the chart shows, and what the chart shows is that we broke out of balance. We broke out of this balance and I'm moving into this balance. And if so, then 32 and 94 govern as key areas to test. And you can see that we pushed into yesterday. We pushed right into the closing gap that we have from the 26th, and we tested this 1932 quite thoroughly before falling through, and that set us up for a short and looking for the overnight low, which we got, and then 1894. It just couldn't get there. This morning, since then, well, let's look at the big picture first. So here we are in this massive balance again. I always have to refer back to build context. Massive balance since February 13th all the way through, and then the market teetered and started to drop right here, and we have a trend day, a large gap, and then another trending couple of days that ended up balancing, resting. And then we had our pullback, the 3-day pullback from Monday, Friday, and Thursday, and then yesterday was right there. So overall, we still have a lot of territory to recover to get back into the balance zone that was there, that has dominated the trading since the beginning of the year. 2023 being the key area above to challenge the buyers, for the sellers to challenge the buyers. This is a key defense area, and 97 being the one below it. So, and 1951 is really the over/under line. I think of 1951 in terms of war. Think of 1951 being taken back is like the enemy breaching the outer wall of the city and starting to make its way towards the inner defenses. The inner defenses would be this 2023 area, and then once breached, then they're likely to take over, and then we're back looking at 2028, 2079 as the areas to target then. And basically the sellers have been conquered. But as of right now, the sellers are holding up pretty good. We did make the turn at 91, and our holding price is down. So today it looks like it's likely to balance, and the overnight session showed some life on the buy side, even though the expectation for the overnight session was for this is yesterday's day session right here, the gray profile, and then this is the overnight session. And you could see that from the open it tested lower. I did expect it to take back some of this rally that we had. It was a kind of a snapshot or flashback rally on the from the low. There was some incredible prints that we saw yesterday on the dome, especially in the Nasdaq. Once it made that low, it had very strong rally. So here's what we saw yesterday in the Nasdaq. As soon as it made this low, the snapback was really strong, 25 points, and it just seemed like buyers saw cheap prices and put in an excess low. So this is acting like an excess low here. You can see there's a really good taper on yesterday's profile. However, I expected it to try to challenge that overnight and chop around in here, and then possibly continue to make its way down to 1894 in the overnight session, therefore taking away that trade. But what it did instead, based on this China news, here's when the news came out. What it did instead is it took back the majority of where we traded yesterday. We challenged yesterday's high by a couple of ticks, and have been sitting up here in what is a P-shaped profile. So if you imagine this profile, let's flip this profile around. Let's make it left aligned, and you can see here this is a P-shaped profile. A P-shaped profile indicates, depending on how it's built, the way it's built now, which is to move away from the lows quickly and then build balance into the P shape, which is right here. This indicates short covering. So a quick move from the low and then balancing near the highs. A very weak low to go with it. I expect the overnight high to be breached, if not before we open, at least right after the open. Remember, we look at that overnight stat as a setup pretty much every day with its high probability. So looking at today, the only thing I can say for today is it's a tough spot to be because we have a gap above. We have a gap above us from yesterday. We've got a gap to fill right here, a gap zone to fill right there, and then a gap price of 69.25. So essentially today, if we continue through the gap zone, look for the mid of the gap as the first target, then the gap high at 62.25 is the second target, and then 69.25 as the next area up. If this sustains any buying out of yesterday's range, that's what I would look for. The gap mid, the gap zone high, and then the gap close and the point of control as the next prices. Anything above that targets 79.25, which is the MC point of control for this area. Again, you're looking at about 52, 60, 225, 69.25, and then the 79.25 as the targets for today on a push up. It's hard for me to tell which probability is predominant here, so I'm just going to wait to see what the market does when it opens. The normal course of an auction in this situation is for it to open. If it opens in range out of value, is for it to test value. If it's not able to get into value, then it's likely to bounce, or to test value, then fall through, retest value high, and then our high probability target would be the 1918, which is yesterday's point of control. And if that's the case, then we're likely to have a choppy inside day for most of the day. We expect the range to collapse a little bit, volume to slow down a little bit, and for the market to just sit around for most of the session. And then as we approach nears, if sellers cannot, if the buyers cannot defend these prices, then it's likely to target 94, which is most likely to be hypo 2 today. But given the P-shaped profile overnight, I expect it to test lower, and I expect it to break into the gap zone. Again, the gap zone is 62.25 to 39.50. That is a lot of information in a very short period of time. I'm not calling you too slow to catch on, but I know I'm kind of shooting off levels and talking about stuff very quickly. But that's basically how things are lining up and how the context is. Remember, yesterday our context was a test higher, but our targets were the overnight low and 94, and that pretty much worked out, except for we missed the the main target, the key target yesterday by a couple points, a few points. That's all I have for you for now. We have 5 minutes to the open. I need to go through my opening routine, and I'll catch you on Twitter. Take care.